Hello, this is the TradeSite U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday the 25th of July 2016 and ending Friday the 29th. Hope you're having a good week. We are in the second half of the core 8 days of earnings here for the second quarter. All the releases from the second quarter coming out between last Tuesday, not all of them, but the bulk of them, between last Tuesday and this Thursday. So there's a lot to dodge. And of course, it's also summertime. A lot of people away, volumes light, people avoiding the earnings jumbles. So we'll talk about that more in a minute. Let's look here first at some of the basic charts. Here's the ES front month futures contract. This is the daily chart of the broad market in futures form. You can see that there was a little bit of action on, not much action for this whole week in general. You'll see that when we look at the intraday chart. It just was really a slow week overall. But we did close near highs, and we've been there for over a week now. Let's look at some of the cash indices. So S&P 500 gained about 10 points on Friday. NDX was up 19. Not yet at new highs, near a breakout though. Another 100 points would do it for us here on the NDX. SOX up 4. Also near highs again. Biotech's up 7, nowhere near highs at all. Crude oil dropped 55 cents to 44.20. That's helping me while I'm on the road here in California on summer vacation for the next week still. Gold down $9.40. There's the static trend line, that red line, probably the target on gold. Take a look at NASDAQ volume. Obviously, it's been pretty light, although there were some earnings days. Remember, Wednesday and Thursday, you can see the volume looked like it's up a bit. It's just a couple stocks that released earnings the night before, traded a little heavier, and brought the volume up. Overall, volume has been light. 10-day moving average of volume is only around 1.55 billion shares on the NASDAQ, which is not big. Advanced decline ratio was plus 885 on Friday on the NASDAQ. The VIX sitting at new lows almost. It made new lows this week and closing there at 12.02. That is a horrible reading for the VIX. Not only does it mean no volatility, that's part of the summer, but usually it means a top in the market. Here's a look at the trend, which closed at 0.93 on Friday, and the 10-day moving average is around 0.90. It's dipped under 0.85 twice in the last week. That's pretty rare, and it's also a sign of a top usually in the market. So we've got a couple of indicators that suggest the market could be topping, but then again, it's summertime and there's just really nobody around is what it feels like as well. All right, let's take a look at what we did this week intraday. Here's a look at the ES and 10-minute candles. And, high to low for the whole week was only 18 points on the ES. It trades that on an average day. So we did not do much. Now, Monday was obviously very small. Tiny gap up, pushed higher, but the overall range for the day, maybe 8 points. Tuesday was even worse, gapped down and stuck in about a 5-point range for the day. Wednesday gapped up, filled, and then pushed higher. Closed, got to a certain point about an hour and a half in and closed there later in the day. Thursday, a flat opening, headed back down. That was probably the widest range of the week or close to it. And then Friday, meandered back up. So, again, not very exciting. That's part of summer. Not as gappy as you often get for earnings as well. Here's a look at the NASDAQ side. A little bit bigger because some of the NASDAQ stocks did gap around NASDAQ stocks. So Monday was a little bigger move up. Tuesday was really flat. Wednesday, that surge. Thursday, Friday came back up a bit. But we did trade about 80 points of range, 90 points of range on the NASDAQ side. Again, that's not much for the NASDAQ, but it is what it is. All right, so let's take a look at let's take a look at the data that's due out this week. And again, here in the U.S., the biggest thing is really going to be the earnings. That's what everybody's going to be focused on. So let me get this adjusted for you. So we'll be looking at, hang on a second. That's not working out right. Why is it not working out right? There it is. So on Monday, which is the 25th, no data here in the U.S. Tuesday, the Case-Shiller 20-City Index, a half hour before the bell, and then consumer confidence and new home sales 30 minutes in. Wednesday, the MBA Mortgage Index at 7 a.m., durable orders an hour before the bell, pending home sales 30 minutes in, the weekly crude oil number an hour in. But here's the big one, 2-day Fed meeting with the announcement on Wednesday. So be aware of that. That's obviously something that could move the markets. So we have that to look forward to. Thursday, the initial and continuing jobless claims. That's the weekly number, along with international trading goods. This is a new number. Natty gas inventory is an hour in. And then Friday, another big one. It's the once a quarter at first look at GDP for this time for the second quarter, the advanced number. This can cause big gaps in the market, whether it beats or not. Employment cost index, and then 15 minutes in, Chicago PMI, half an hour in, Michigan sentiment. But keep in mind the big thing here, separate from the Fed and that GDP number, obviously it is summer. A lot of people are gone, but it's also those last 4 days of earnings. There's more earnings than on Tuesday, Wednesday, Thursday than any other 3-day combination in the quarter. A lot of big players kind of sit out on this. Be aware of stocks that are in the same sector that can gap. It's a dangerous time to hold anything overnight. So we will see what we get. I'm on the road this week, but will not affect the reports much, and I should be in the lab for the opening hour and a half or so each day. Charts, as usual, brought to you by eSignal. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading week.